everybody. I'm Stephen Kalayjian, and welcome here this Tuesday afternoon here. Back to the futures every Tuesday and Thursday from 1:30 to 2. I'm so honored to be here again. One of my favorite assets, if not the favorite asset, is futures markets. I love them, and there's so many people around the world that are shifting from trading stocks to futures, from trading options to trading futures. It's just an unbelievable way. So a lot of times people who are trading options, they're telling me, they are frustrated. They can't put stop orders in. The spreads will, even if they're doing at the money calls and puts, you know what? Futures to me is the greatest asset to really trade. So some really great patterns here today. We saw the S&P futures earlier this morning trade above the 5,500 level. On the bigger time frames, I have sells on the daily and on the weekly on the QQQs. I just got big sell signals Monday morning on the spiders, the Dow, the diamonds, and on the IWMs on the daily. Okay, which means any bounce up, I'd be looking for shorts. Eventually, I think we're going right back down again. Now, the big number tomorrow is the CPI number. It's the last number, obviously, before next Wednesday's interest rate decision. Everybody's talking about a quarter, maybe a half a point. Regardless of the fact, they're going to cut interest rates. The CPI number is supposed to be 2%, right? Before they cut rates, they're looking at 2 point. Right now, we're at 2.9. There's a couple of times in history when they cut rates. Okay, it's actually bearish for stocks. Crude oil got absolutely decimated today, is down north of 4% on the day. If crude oil is telling you something, it's telling you we're going into some type of recession. We have an inverted yield curve. That's number two. We're seeing so many economic slowdowns here. 1.3 million people lost their jobs this year. We're seeing high rates of inflation still carrying. The 30-year bond market up 20, 30 seconds today. Great patterns. Those of you who are looking to trade futures, especially using my software, between the index futures, the commodity futures, the financial futures, really, really great patterns. You should be looking at the 30-year bonds as well, adding that as long as you, on top of looking at gold and other assets as well. I want to show you a really great pattern today. So coming into the day, the spiders, the underlying ETF to the S&P futures, I had buys on the 30 and 60-minute time frame coming in. Okay, yesterday was a Picasso day. We got the pullback yesterday when the 15 and 30 reversed to buy on my indicator 4. The 60-minute time frame was still bearish. Remember, I have 5 conditions, all predicated on my indicator 4, using 3 time frames of 15, 30, and hourly. And I had the buy reversal on the 15-minute time frame, then the 30-minute time frame, and then I got the nice pullback around 11:15, 11:20. S&Ps ran 50 handles. At the end of the day, we got the pullback again on the 15, also the 30-minute time frame into the positive MACDs. So you had a disconnect with a buy divergence. Remember, 5 conditions. Each of my conditions has 2 strategies, a buy and a sell divergence. Monster pattern that went from 59 up to 81 on the S&Ps towards the end of the day. Now, what happened here today? So looking at my software here, you can see now I'm already bullish on the 15 and 30-minute time frames, sorry. And then the 60-minute time frame reversed to buy right here. So when the 60-minute time frame reversed to buy, right, the next thing I look for is a pullback on the 15 and or 30-minute time frame. And man, oh man, do we ever get that? Look exactly what happened right here. Okay, this is the pullback yesterday. This is the pullback today. The QQQs were trading below 53, 52 and a half. They just ran 4 points. The NASDAQ futures were trading below the 16,000, about 16,580, I believe. Yeah, about 16,590. Okay, and they just ran about 160, 170 points here. S&Ps were trading 48 and a half, now trading 83. So when you get these patterns like this, right, again, using multiple time frames, it's really important. When a 60-minute time frame on the Qs, the QQQs, correlated with the 30, correlated with the 15, now you have a trend, right? Visualization, repetition is about exactly what we do each and every day during my live stream. People all around the world use the software. People all around the world understand how to use multiple time frames, understand the indicators, understand how these patterns repeat themselves each and every day. It is vital, important to be able, I've taught this, like I said, to some of the top hedge fund managers in the world. Okay. So when the 60-minute time frame reversed here, you can see if I go back to the Qs here, this is the 15-minute time frame, reversed to sell on my indicator 4 on the 15. But now you went from the 15 reversing to sell, which is okay, but the 30 and 60-minute time frame still in buy mode. I had what is called a buy divergence and a disconnect. One of the 3 time frames reversed to sell. The 2 are still bullish. Again, it's all based upon combination methodologies. So when the 15 got deeply oversold right here, okay, it also set up the long right here on the 30-minute time frame. And look at the QQQs. Unbelievable. Look what they did. They pushed up 4 points. The NASDAQ futures valued 160. No way near to be short the market down there. Not when the bigger time frames are telling you to be long. Absolutely not. Absolutely not. Absolutely unbelievable pattern. Okay. The same thing with the spiders. If you look at the spiders here, okay, the spiders are still bullish. Okay, this is the 5 and the 15. Sorry. Here's the spiders. Okay. Let me see where they are here on the okay, 54.82 on the S&P. So if you go here and you look at the spiders on the 30 minute, okay, you can see the spiders, okay, are still bullish on the 30 and are bullish on the 60 minute. Let me put this up. Okay, so when I got this pullback right here, the S&P futures were trading around the 48.5, 49.50. And I just went like this. I saw the deep oversold condition on the 15-minute time frame right here, right? Let me just see what I did. I got to change this again. It's the 5-minute. I'm just going to put this. Oh, let me change this. Okay. When the 15s reversed to negative, I knew right here, this oversold condition, even though my algorithm is negative on the 15, it gave me the ability to do what? To take a long based upon the 30-minute time frame getting oversold. So the fact that the Qs reversed to buy on the 60 gave me more confirmation that to buy this pullback, that the spiders, that the 30-minute time frames were getting oversold right here into the positive MACD. So when we got this pushed down, the 30-minute time frame on the spiders and the 60-minute time frame, we're looking right at them, the MACDs were positive, so it was a buy divergence in a disconnect, meaning one of the 3 time frames flipped negative. Okay, so it's important to understand divergences. Every pattern, every strategy I have written and know about is all predicated on a divergence. Now, I want to show you a great pattern. Okay, anybody remember the movie Back to School with Rodney Dangerfield? Okay, I named the pattern called the Triple Lindy. It's world, people around the world know about it. A Triple Lindy is a buy divergence in a disconnect or in a negative trend. I'll say it slowly. A Triple Lindy is a buy divergence in a disconnect or in a negative trend. In this example, I'm going to show you, it's in a what's called a disconnect. Okay, it's what's called in a disconnect. A Triple Lindy has to have these conditions. Indicator 3 turning up. MACDs have to be crossing positive from below my pivot, yellow over blue, on both the 3-minute and on the 5-minute time frame. Okay, and the pullback on the 3-minute time frame is the strategy. So when the S&Ps were trading 73.5 here, the strategy is to short these, wait for the pullback, reverse, and then go long. And the S&Ps on this pattern right here pushed down to the 64.5, 65 level. Beautiful pattern. And then boom, ran 22. These trades last anywhere from 1 to 8 bars. So from here, 1, 2, 3, 4, 5, 6, 7, 8. So the S&Ps in theory on that pattern, okay, reverse to buy, and the strategy was to be able to buy the pullback, cover the short, okay, and then look to buy the pullback, and then understand that you're going to a triple Lindy runs anywhere from 8 to 13 points. This ran from 65 up to 85, ran 20. The most a triple Lindy ever ran to me was, I think, 26, 25, 26. Right now, we're up at 20 points right here. Okay, so what's important to understand is how to use these patterns. So here, for example, right on the pullback just recently here, okay, on the 3-minute time frame, and let me just switch this to a 3-minute really quickly. Okay, so you see here the 3-minute reversed, okay, here. Now we got the positive MACD. This little pullback right here roughly got down to 77.5, 78, and we just ran another 8 off the 3-minute time frame. Okay, now one of the things I will tell you using my algorithms, that when the MACDs are above the pivot and the algorithm reverses to buy with the MACDs above, now I'm going to start looking for shorts and then wait for a different kind of a pullback here, okay, and wait for a different pullback. It's a very, very powerful, very, very powerful pattern. This triple Lindy, it can go a long way, okay? And again, in a negative trend, a triple Lindy can do two things. This here was a disconnect, okay? This here was a disconnect. So a triple Lindy basically can give you the ability to get set up the short in a negative trend after you get the push down, the buy, the push up. Sometimes the triple Lindy, depending on the negative trend, like we had this, I think, on Friday, right? Where it pushed up and set up the short on the 15, or a triple Lindy can set up a buy reversal on the 15-minute time frame, okay, creating a disconnect. If the 15 reverses to buy, and this 30 and 60-minute time frames are still negative, then the lows are in for the day, and then you could look to buy a pullback here, okay, on a triple Lindy. Very, very solid patterns. We caught that beautiful long down there. It was a great, great, great entry. And then again, probably out after 2 or 3 bars. On the third bar, you ran already 12 to 15 points on the triple Lindy. I would be shorting S&Ps up here right now if they get up to the 85 to 91 range. NASDAQ futures, if they trade 70 up to the even handle. And that's what I mean by scaling in and out of positions, okay? So again, using multiple time frames, I was able to see that great pattern when the whole world's going sell, 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 we're going buy, 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 right? And that's exactly what we do here using technical analysis. I spent nearly 10 years of my life building this platform, being able to understand the ability for technicals. Again, I always went with the concept that, you know what, I have my own DNA, and if I live a life that repeats itself, my philosophy was, well, I think the market's going to do the exact same thing, okay? Now, I wanted to show you the Qs here, okay? This is the QQQs. Now, you can see the 15-minute time frame reverse to buy here, and then this pullback right here, okay, just ran about $1. So the NASDAQ futures, if you look NASDAQ futures just ran on the exact same pattern. The NASDAQ futures on that pattern, okay, just ran about 40.50 on the NASDAQ futures. Okay, so when the QQQs reversed to buy on the 15-minute, the 5-minute time frame pulled in nicely. Okay, S&Ps, if you're short S&Ps above 85, I would look to cover 78 to 82 and a half range. Okay, so if when the 15-minute reversed to buy, and then the 5-minute time frame that happened on that pattern, you could have traded the Qs for $1, or the Nasdaq futures were trading probably around the 36 and a half level, and they just traded up to 76 and a half. So now you're looking at a move here that's pretty substantial, really pretty substantial. Okay, again, these patterns repeat themselves. I teach these patterns each and every day during my live stream. It's very important, okay, to really fully understand how to use multiple time frames. When you trade the continuous contracts like the NASDAQ, the S&Ps, the diamonds, the RTYs, gold, and or the 30-year bonds, you need during the U.S. session to look at the underlying ETFs, the SPY, the TLTs, the GLDs, and the QQQs, the DIA, if you're trading the YMs and the IWMs, or you can even use the TNAs for that matter. It doesn't make a difference. Learning correlation studies is very important. Okay, I've been doing this too long, and my gift to you is to learn everything I have within my brain to be able to now help you become better traders, to be consistent, to be able to have discipline, to be able to have the confidence. Without this, there'd be no confidence. Literally, I spent, like I said, nearly 10 years of my life teaching, building this, forward testing, then going live and teaching and showing this to others in amazement. Now, I like I said, the research, the amount of hours, the thousands and thousands of hours I put into this. Okay, and now my gift here on Back to the Futures on Tradier Hub, to be able to teach all of you how to use the software to enhance your trading, to be able to learn from me, to be able to see the markets effectively, to gain the confidence. You have a mentor like myself, okay? I stream every day from 9 to 4, and I do the show here from 1:30 to 2 every Tuesday and Thursday. And anybody has any questions or anybody that needs help with anything, please text me or call me at 914-500-7484. But it's the ability to capture big moves, to see an oversold condition on the 15. I went right to the 30 and the 60. I'm like, oh, the 60-minute QQQ is reversed to buy, correlating with the 30. All right, the 15-minute time frame on indicator 4 reversed to sell, but it's setting up a great long on the 30. Boom, buy them. Right? I would buy them. Qs got down to the 16, 18 was the low here. It got below the 18,600 and ran 175, 180 points. Okay, so whoever sold the NASDAQ futures below 18,600, anyone who sold the S&P, can't even talk S&Ps. S&Ps below the 5450, they jumped. Okay, meaning, you know what? It's just really remarkable how, it's really remarkable how people really don't understand how important it is and how these patterns truly really repeat themselves each and every day. And when you have a pattern, okay, that really you can gain the knowledge of trading and the ability to give you this self-confidence, it really goes a very long way. S&Ps, I would leave lowering your stop or look to cover your short between 78 and the 79 and the 82 and a half range. Now, tomorrow's a CPI number. I told a lot of people that one of my favorite times to trade the markets are during the pre-market hours. So there are 7 times in a month that we have what's called a red number. We have CPI, PPI, retail sales, durable goods, GDP, unemployment number and housing or job housing / jobless claims, right? But again, what's important, okay, what's important here, okay, is to understand how when you're looking at the market in such a way that you're able to make the most amount of money possible by using the technology and the software that we use each and every day. So when the QQQs just reversed to buy on the 15, right? I said I would look to short. It pulled in about $1. Then I would look to cover, and then this ran $1. And then here's what I'm talking about. Here's the QQQs on the 5-minute time frame. This is when the 15 reversed to buy right here. You could have taken that short. Okay, it dropped. The NASDAQ futures dropped about 40. And then here is the pullback right here on the 5-minute. And you can see the push up about $1.20. The short, then the long, and beautiful two patterns. My research has shown me that on any given day, you'll get between 4 to 6 great trades on each of the asset classes, on the index futures, commodity futures, or financial futures, because the math is different. You're able to get these moves in a way that you'll be able to get these moves anywhere like 12 to 18 times a day per se. All right. It's really important to really focus here on the use of the multiple time frames, on the continuous contracts that look at the 3, the 5, the 15, the 30, and the hourly, on the underlying ETFs, the 5, 15, 30, 5, 15, 30, and hourly. And again, beautiful correlation patterns, very, very strong. Now, because the 15s reversed to buy, I don't think we have enough time. I'll be looking for a pullback here to hopefully set up the long on the 15-minute time frame. The spiders just reversed to buy as well, just now on the 15. So now I know one thing, that the lows are in for the day, and any pullbacks I'd be looking to buy here. Okay, first pullback would be the 5, and then I don't know if we have about 2 hours to go. The next one would be the 15. Does anybody have any questions here at all? It's really important to really be proactive. Nobody's going to bite your head off and ask a question. It's just really part of who we are and what we're trying to achieve here, to be able to give you the most ability to be able to trade the markets effectively and to be able to really fully understand the capabilities of trading the market using the proper software each and every day. And it's really a very, very, very big understanding of using technical analysis to the various degree, where you want to be able, okay, to trade the market with the confidence level, to be able to trade the market by looking and seeing and having everything I do is based upon visualization and repetition. NASDAQ futures just ran about 50 just now. The QQQs on this pattern just rallied from the rallied about $1.20. Okay, now I think they should get a pullback here. First pullback should be the 5-minute time frame. The second pullback should be the 15-minute time frame. So again, patterns repeat themselves each and every day, and learning this type of software, learning how I've seen all these patterns, I identify them like that. So many people around the world understand the different strategies, learn from me over the years, learn to say, hey, this is a triple Lindy, this is a buy divergence. Oh wow. If they're trading stocks, Amazon just correlated with the 15, the 30, the 15 just correlated with the 30 and the 60. We're going to buy this first pullback. Amazon just ran north of $1 just now. So these patterns repeat whether you're trading futures and ETFs and or stocks, or crypto or Forex. It doesn't make a difference. Right now, we're here to talk about futures. And again, futures markets, to me, are going to just absolutely explode. I've never seen more and more people wanting to get off trading various different other assets, but to learn futures. And, a lot of people have come to me and said to me, Steve, I don't know anything about futures, But it's really ironic that, it's I don't know too much about them. Blah blah blah. I said, stop fussing. I said, if I told you, you want to trade, we're going to trade water. Is that going to be better for you? Is that going to be different for you? No, that's not going to be different, right? Is that going to calm you down because we're trading water instead of me saying the word futures? So my point being is that it's important to understand when you have the right technology, okay, that you're able to be able to trade effectively. Let me just show you the TLTs really quick here, which is the 30-year bond, the 20-year bond future, the 20-year bond ETF. Now, they don't have a 30-year bond ETF, but I use the 20-year bond when I look at the 30-year bond futures. And look at this beautiful pattern. The oversold condition, okay, into the buy reversal, into the correlation right here. The 30-year bonds, I'm looking at them, were trading at one. When that happened, you could have probably, they were trading 15s or 16s. You could have probably bought 16s and 1, 2, 3, 4, 5, 6, 7, 8. 8 bars, the 30-year bonds, because my trades last anywhere from 1 to 8 bars, whether it's a 3-minute, 5-minute, or a 15-minute. And in the 8 bars, up to 8 bars, right? The 30-year bonds just went from the 126, 16, 17, and traded up to 126. Well, you probably could have sold, it's 27 bid at 8. So it just ran, technically, it ran 10, 30 seconds. So if you did one contract based upon this pattern, you just made yourself $300 and something, okay, 31.25 times. Let's say you caught 5. You made 150 less fees per se. Okay, all right. Now, one of the things I will tell you that how these patterns repeat themselves each and every day, and it's just being patient. Again, one of my 5 key words: consistency, discipline, confidence, patience, and passion. You got to wait patiently for the pattern. Okay, you got to wait to fully understand when things align. You want to swim with the tide. You want to understand the correlation patterns, okay? When the Qs reverse to buy on a 60-minute time frame correlating with the 30 and then the 15, then what do? You wait for the deep oversold condition, and then bam, there it is, okay? There it is. So when we got those sell reversals on the 15-minute time frame, I didn't flinch. The market wasn't flinching. They weren't looking like they were going to go lower, and they were going to hold on the 30 and 60. I said, back up the truck, Gus. I'd be a buyer, right? Okay. Does anybody have any questions at all? We got 2 minutes to go. I'm so proud to be here. I'm thankful for the team at Tradier each and every day for giving me this opportunity to be here Tuesdays and Thursdays from 1:30 to 2. Again, like I said, so many people from around the world are really just looking to explore and learn to trade futures. And, like I said, to me, this is 41 years in the industry. As of August 1st of this year, I'm going on my 42nd year. Hopefully, I'll make it to the 50 plateau. I don't have no plans on retiring. I love what I do. I love each and every day to meet new people, to be able to teach the knowledge I've gained over the years. And like I said, I just want to see my legacy depends on your success. And again, if there's anybody who has any questions or wants to reach out to me, please feel free to call me at 914-500-7484. Even during my live stream, I do not give any investment advice or recommendations. It's all pure edutech, and I'm teaching the markets, and I'm explaining the patterns and teaching what we're seeing and how trades and our trade ideas should be taken. With that, if there's no questions, I will see you Thursday at 1:30 here. Back to the Futures. Have a great day, everybody. I'm looking for a pullback on the 15-minute time frame. That should set up another long here. Have a great day, everybody. God bless. I'll see you here Thursday at 1:30.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.